Yo, what's up, everyone? It's your boy Looney back with another market breakdown. Right now, the market sort of feels boring. There's not much action, there's no crazy breakouts, but this is exactly when dollar cost averaging shines the most. Quick shout out to my Discord community. I have a free section for anyone and everyone to join, and then I also have a premium version for $8 a month, and it's where I drop trade alerts, deep dive strategies, and exclusive plays. Links are in the description. Check it out. Why does DCA still works? Markets moves in cycles. Sometimes they're explosive, and other times they drag sideways. The worst thing you can do is to sit on the sidelines waiting for the perfect entry. DCA removes that problem. Instead of timing the market, you keep buying small amounts at regular intervals, removing emotions from your decisions. I'm going to show you two examples, one being a crypto, other being a stock. First one is Dogecoin. Now, I have a lot of Dogecoin, and this wasn't really on purpose. I simply just bought over time. I did $3 a day, no matter what, whether it went up, whether it went down. And it's pretty stagnant right now, which is pretty surprising because of how volatile this coin is. And on the day, it didn't really move. I mean, it moved 5%, but on the bigger scale, that's not that big of a jump, especially if you've been in crypto. 5% is nothing. And over time, this smooths out my entry price, and when Doge pumps again, I'll already have that stack. I think at one point I had 7,800 quantity, maybe even right now the same, like 7,400, and I sold at the top. And because of that, when it dropped and I dollar cost average every day, I ended up making back my quantity and still having a profit. So I'm able to stay long term, but also have better entries. So I'm buying little amounts every day, but if I see a big spike, I'm going to take profits. I'm not going to take all out, but if I see unusual behavior in the short term, I'm going to take a little bit out. And it's a very good strategy. Taking profits is a good strategy. And I think you should always be taking profits when you see is appropriate. Next example is Sony. And I've been stacking up this stock for a while now. I've been buying small amounts, same idea, $3 a day, but this one only trades during the week, so a little less. And I'm trying to get to 100 shares, and I'm doing it slowly. So if this stock trades sideways for a while, I love that. That's perfect. That's what you want to see. You want to see a stock trade sideways, and then once you're stacked up, you have a good average price. And then when it spikes, you obviously profit a lot. It does move pretty steadily. This one doesn't move that much. I'm only up 20%, and my goal is to either be 100% return or get 100 shares and run covered calls. It's pretty interesting. If you have the gold, it tells you what the fair value is, and it has that as $24. So it's pretty close to the fair value. It's slightly undervalued according to them. I think it's at the perfect price point. You could clearly see it's trading a little bit higher at the Bollinger Band. So it's toward the higher end. It's definitely due for a pullback, which is okay because I dollar cost average. If it dips a little bit, I'm going to buy. And that also brings us to my next segment. Bad news is good news. Right now, we're in a weird market where if you get bad news, that's actually good because you're able to stack up. If this stock drops, and if you're long-term on a stock, you're okay with some dips. So short-term volatility is actually good. And if this stock drops a little bit to $18, I'm okay with that because I'm buying a little bit every day, and it brings down my cost average, my cost basis. And I think long-term, this stock can go to 40. It might not be in the next month, but it was trading at 90 at some point, and it's sort of just stayed sideways or relatively neutral. Past 5 years, 60%. So not much movement. And if I could stack up and once it hits the top, I am able to cash out or I'm able to run covered calls. And vice versa, sometimes when you get good news, that is a little concerning because people end up selling off on good news just because they want to lock in some profits. So that's why I consider bad news not bad, especially if you're DCA. And my final thoughts is the market feels a little bit slow right now, I would say, and this is the time to build your positions while prices are stable. Now, I wouldn't go all in, and I wouldn't wait for a pullback because you don't know what's going to happen next. So I would DCA and put a little bit at a time. And let me know in the comments, are you guys DCAing or are you sitting on the sidelines? Don't forget to like, subscribe, and join my Discord. Until next time, peace.